What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the indices. Break down what the charts are telling us and why it's very likely for the market to sell off a bit tomorrow, right before CPI comes out. And CPI is coming out once again Wednesday morning. So I'm going to break down what the charts are telling us, what the new stat and technicals are suggesting, why I believe this, and why you should be very, very careful in a market like this, as things can become very wild in a very short period of time. Before I break anything down about this information, though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 5 free stocks, each worth up to $2,000. And the best part is, any could be a free Tesla share. The offer ends in just 6 days. Check it out before they run out. With that out of the way, let's get on with the video. So let's break down these charts right now. Looking at them, we can actually see some weakening momentum on SPY. But when we look at the chart, you can see we actually closed quite above max pain for the time being. And we did actually reject off where this previous high was on SPY. So the question is, are we going to try to pump tomorrow before CPI? Or is the market more likely to try to sell off a bit and consolidate? I do believe we're going to sell off, consolidate quite a bit and have a slight red day tomorrow. But then that does not guarantee the market's going to just crash from here, right? It could do that based off macros. But you have to remember, CPI can be very manipulated and unexpected things can still happen. So we're going to make a big move after CPI comes out. Until then, I'm going to break down what I am seeing for the markets. Now, for SPY, I want you guys to remember there aren't too many options expiring tomorrow. Only about, what is this, like under 300,000 in total options expiring. The put to call ratio is only like 1.58, with 411 being max pain. The market makers could afford to watch the market even cool off a bit. We could see SPY close very close to max pain, which is actually quite lower than where we currently are. I think the odds favor that. And also, I want to note that Tuesday, we have some Fed speakers, right? And when the Fed speakers talk, you could throw technicals out the window for just some short periods of time sometimes, because if they say something very unexpected or something that scares the markets, the market could just sell off. It's just going to react to what these speakers say. Now, we have Jefferson speaking in the morning. He tends to be kind of in the middle, and I think the same thing could be said about Williams, maybe a little bit more hawkish, I would say. And Williams will be speaking around 12 o'clock, excuse me, 12 o'clock p.m. Eastern time. So could cause a bit of a sell-off. We could see the market rattled a bit by these speakers, but I don't expect it to be too crazy. I think it's going to be more choppy and kind of range bound, just like today. For Wednesday, however, before the market opens, we have CPI, right? And before these big events, you have to remember Tuesday is going to be the last time the market closes before CPI comes out, an hour before the market opens on Wednesday. Why is this important? Because this is the last chance for a lot of people to hedge positions, to start selling off for repositioning and things like that. It's very likely that's going to happen. And what that means is we might see some selling. We might see the market just trade sideways. That tends to happen during these big events or right before them. For earnings, we have PayPal and Palantir. Not too crazy, not too huge so far. Airbnb, Rivian, and Nikola also have earnings tomorrow. We also have Roblox and Disney for Wednesday. Wednesday is going to be one of the biggest days for earnings. I think Disney's is going to be a big one. So make sure you guys are ready for that. The market got some shorter term and also medium term bearish news, and that's based off this Fed report that came out showing that through the senior loan officer opinion survey, we're getting some signals and opinions of tighter commercial and industrial loans. The same thing is going on for household debt instruments. This tells us that there's a tightening of financial conditions, which tends to be bearish for the markets because the recession that's coming could get worse than expected, despite what the Fed tells us. Now, there are articles out there which are kind of suspicious. They're saying Apple and Amazon could power the S&P 500 to 4,400. That's the 430s for SPY. Do I think that's going to happen? I mean, it's a possibility, but it's quite unlikely because I think they're already very overextended. Unless we get some very bullish news, I would say when the Fed, or if the Fed pauses, then something like that could happen. But we're pretty far from any announcement like that, and I believe the market's overextended, as I mentioned in my previous videos. So for like the medium term, right? Let's just assume that we either pump a little more, we just hold these levels between like 411 and like 416 for the did I say medium? I meant the short term for like the next couple of trading days going into early next week. Even if we hold these levels, okay, I don't consider that sustainable. I think the market, right, by the time we get to the third week in May, approaching June, I think the market's going to be selling off and closer to the 400s, if not the 390s, by the time we get closer to June. Okay, I want to note that I'm still more bearish for like the medium term. For the short term, however, there is still a possibility of more upside to come, but that will depend heavily on CPI. Until CPI comes out, okay, I'm seeing some bearish signals. I think the market might sell off first before CPI. That's what I'm thinking. Then CPI is going to cause a big reaction to either the upside or the downside. But until then, I'm seeing some downside. Here's part of the reason why. When you look at SPY, for instance, we're just stuck in this channel going back and forth and back and forth. And we are weakening on momentum right now. We can see there's this bearish crossover on the 1 hour time frame. SPY starting to downtrend a bit. We did barely close green, but I think we're just going to be stuck in this channel. We are going to likely close very close to max pain. I'm anticipating that in the morning, we're going to open a little bit lower, kind of gap down a bit, try to push up in the morning, uh, get rejected or get a kind of like a fake breakout and just end up failing, coming all the way down to like the 410s, pushing up and closing on like 411 or so. So very choppy sideways price action with a red close is what I'm seeing for tomorrow. And then I believe this will translate itself into the whole market, because part of why I'm saying that is based off what I'm seeing from different charts. The dollar is not really doing too much. It's just pretty flat. So this opens the possibilities for either direction. But here's another reason why I'm a little bit more bearish for tomorrow. First off, the VIX is near some major support. Um, the VIX could be forming like a head and shoulders like formation. And also, it bounced off 16.69 the last time it was around that level. We're currently at about 16.98, right? So the VIX is very undervalued. It filled its gap already. It should, or it's very likely it might try to bounce from here just a little bit as a reaction. And why is this going to happen? Because of the collective market dictating it. Additionally, look at the divergences on the QQQ and the SQQQ. On the QQQ, we have a bearish divergence developing. Now, I don't know if this means we just sell off immediately or if we have a little bit more room to go up and then we sell off, but it's got to be one of those two most likely. I'm, excuse me, sorry guys. I'm leaning a little bit more bearish for tomorrow though, and that's also because of the SQQQ, right? We have this higher high on the QQQ, on the RSI, we're making lower highs. On the MACD, the same thing is going on. We also have this bearish cross right here on the 1 hour time frame. On the 4 hour time frame on the QQQ, momentum is weakening just a little bit. It's still holding up all right, but it's also losing some momentum. On the smaller time frames, it's already getting these crossovers, so it is weakening even more. You can see right here on the 30-minute time frame, we have another bearish divergence on the MACD this time. Same thing on the RSI. So for tomorrow, I think the QQQ is going to try to push up in the morning just a little bit, then just end up rejecting off 324 or so and start making its way down to either 319 to 320. Around this area would be very, very healthy and completely fine. There's also the possibility of it retesting the 200 EMA. So that's currently around 319. A very healthy sell-off, a small bounce, and a red close would be very healthy for the QQQ. Nothing wrong with that. And I think it's going to happen right before CPI. Additionally, the SQQQ is telling us the same thing, because on the SQQQ, the MACD is uptrending, right? It already bottomed just last week and it's starting to uptrend. The RSI was at 25 last week. Now it's at 37. The RSI is uptrending. MACD is uptrending. The price made a lower low, however, right? RSI is telling us that this thing is likely going to reverse and try pushing to the upside very soon. What does this mean for the market? Well, the SQQQ is inversely correlated with the QQQ, which means it's kind of like looking at the VIX and like the SPY or the S&P 500. So this is going to start pushing up. The QQQ is going to start pushing down. The S&P 500 is likely going to push down too, as it tends to be highly correlated with the QQQ. They've been running almost as if they're on one algorithm for the last couple of months. So that's what I'm seeing right now. The odds are starting to favor some downside in the market for tomorrow. Now, I'm just going to briefly go over some of the big tickers for right now. Tesla has a bearish cross on the PPO. It is starting to downtrend a little bit. There's a possible channel developing. I'm not going to draw it out just yet because there's no confirmation of it. Unless we open tomorrow very early, then I could draw it out. But for now, I'm not seeing too much from like this technical standpoint. I mean, there's no divergence or anything like that on Tesla, but we are getting a crossover on the PPO. Additionally, Tesla did reject off this like 174 area. So what I told you guys was if we broke 174.5, if we broke and held it, Tesla had the potential to fly to 178 to fill its gap. Instead, it rejected off 174.44, 6 cents away from the zone I was talking about. Then Tesla came down to 169. I predicted yesterday Tesla would test 168 to 166. It actually came very close, but actually held quite nicely. So that was a little bit ironic. And I think Tesla has some relative strength associated with it. For tomorrow, I'm thinking that Tesla's going to likely open very flat, make an attempt to push up again and try to get closer to like 173 almost. Reject, come down to 170, could break a little bit lower to like 168 again if the market sells off. We might see Tesla just trade very sideways around this like 168 to like 172 zone, back and forth, but we might still get a red close for Tesla based off this. Once again, lots of hedging tends to happen on days like this, and we might see Tesla sell off on the weakening momentum right here. But this does not mean Tesla is done for. It does not mean it's the end for Tesla, because we could always be forming like a bull flag right here. It's always a possibility, right? It still is excuse me, sorry. It still is very valid, and we just have to be patient. If Tesla is forming that, I mean, we could draw out something like this. Still have to wait for how this develops, of course, but just got to be as patient as possible. Could this be a falling wedge-like pattern that's developing? I mean, it's also another possibility. Could just be forming this right before CPI. If not, I mean, it's completely fine. We'll see what CPI causes. But for now, I am seeing some downside for Tesla. It's going to likely pull back a bit and then make a big reaction after CPI. For Nio, it's the same thing. I mean, Nio is likely going to pull back too, retest 7.9, if not 7.78. Very, very healthy for a pullback. As I mentioned before, the dollar is flat. It's not really doing anything. The HYG is actually red. That's actually another divergence that's forming on the markets. This tells us that the bonds traders, if you want to use the word term, smart money, they're selling right now. They're starting to sell more, right? They're not trusting the rally. They're selling off already. This could be a bad sign for tomorrow approaching CPI. Microsoft is pretty flat. It's not really doing too much. I could see it sell off to about 306 tomorrow and just trade very flat. Not much is going on. It does have a possible, however, bullish divergence that's developing. I don't think it's gonna push up just yet. It could push up a little bit later, and this could still be developing, so we'll have to wait. But for now, I mean, there's no sign of a bounce just yet if this bullish divergence will play out immediately. But for now, it looks to me like we might just see Microsoft trade very flat. And then if this divergence plays out, maybe after CPI or etc., then we could see Microsoft bounce. But for now, it looks like it's going to pull back a little bit. For Amazon, very flat. It closed almost where I predicted. I told you guys that Amazon would close around like the 105s or somewhere around there. I think tomorrow, Amazon is looking pretty flat right now, but it is forming a bearish divergence on the RSI. We might see Amazon retest the 200 EMA around this 104.5 area, but I see it just being very choppy and sideways tomorrow. So I'm seeing a sideways day for Amazon, maybe somewhat red. Nvidia pumped even more than what I expected. So this was ironic. It just kept going. And it's super overbought. I mean, on the 1 hour time frame, the RSI is at 78. I did not expect it to pump this much. That's pretty insane. So what do I see going forward? I mean, both AMD and Nvidia pumped quite nicely. But for tomorrow, I mean, it's crazy, crazy overbought right now. And also we have a negative divergence on the MACD. I don't know if this is done yet. I mean, it is possible, for us to just throw indicators away and just see this thing pop a little bit more and then it sells off, or it could just sell off from here. I'm thinking it's got to be one of those two. A slight sell off would be very healthy because we're approaching CPI. And I am leaning more towards that, but I'm always open to the other possibility that it's still developing these bearish divergences and it needs a little bit more time. But like I said before, the most likely possibility would be this thing maybe pushing up in the morning, then just coming right back down. And coming back down to about this like 284 to 285 area would be very, very healthy. Before 285, we have 287.5 as another support. That was previous resistance, so I could see it coming down just a little bit, and then a big move will be made depending on CPI. Aapl is looking a little bit more bearish to me. I mean, it really failed to break out or do anything significant. Got a bearish crossover on the PPO now, and it could try to pop a little tomorrow, but I do see it just selling off a little bit more. It might treat the 50 EMA as support, so it might get to the lower 170s, but I don't see it crashing or anything like that. Just a slight sell off, very sideways day is what I'm seeing. AMD, nice day. It's up over 6%, looking quite nice, but it is very, very overbought. When that happens, especially as the market sells off, we tend to see this cool off a bit. So it could come back down to about 92.82, if not 90. That would be very, very healthy. Nothing wrong with that. Meta is very flat. I told you guys I was actually a little bit more bullish on Meta. We had some very nice signals developing on the RSI. I'm thinking now that we might see Meta as it's forming this potentially bearish divergence or a negative divergence. We might actually see Meta cool off a little bit more. So now it's starting to flip today. Uh, it might pump in the morning, retest the 50 EMA, then come all the way back down to where this 200 EMA is and just remain sideways from there. And I just see it trading very flat tomorrow, maybe a little bit in the red. And that's basically what I have for this video. So I want to thank you all for listening. I was bullish on Google. I told you we might see this thing get back up to about 109. We actually closed on 108.24. And this played out quite nicely. But the real question is, now that it's been this overextended, uh, I'm not seeing anything crazy going on with it. I'm not seeing a divergence truly forming. There's not too much going on. The MACD is still pretty strong. I see Google trading sideways tomorrow. Might cool off just a somewhat tiny a bit, but it's not looking too bad compared to the markets. Actually, it has a lot of relative strength to it, which will continue into tomorrow. So a somewhat red day would be okay, but I don't see it being too bad. All right, guys. Anyways, I just thank you all so much for listening. Don't forget about the Moomoo link, and also I have for you guys are in the comments section if you're interested. Anyways, thank you all for listening. Have a great day. The market to the moon as the long term is very bright, and peace.